Meta shares are up 9% this Thursday morning after the company posted an 11% increase in revenue, beating the street estimates for the quarter. Meta's ad sales drove revenue higher than expected, and the tech giant's ad impressions, a key to the company's monetization of its platforms, that jumped 34% actually year over year as the price per ad went down by 16% in that same period. Meta CEO Mark Zuckerberg said in a statement on Wednesday, "We continue to see strong engagement across our apps, and we have the most exciting roadmap I've seen in a while with Llama 2, Threads Reels, new AI products in the pipeline, and the launch of Quest 3 this fall." Let's bring in Brad Erickson, who is the RBC Capital Markets Internet Equity Analyst, to weigh in here. Brad, great to have you here with us to kick off this conversation and kind of the recap of Meta's earnings and the outlook and the guidance. I want to kind of get your high-level and top-line takeaway from the earnings.
Yeah, nice to see you, Brad. So I think at a very high level, what's going on here is Meta's kind of doing two basic things. One, they're creating products that are driving people to spend more time and frankly gain more functionality on their platforms, such as Reels, such as things like messaging with businesses and other things. And certainly you mentioned Threads, right? That's one half of it. The other half is that they're using AI and they're having people do a lot of this marginal engagement on the platform, meaning they understand exactly what they're doing and they understand the output from an advertiser perspective. And so the way I always talk about this is you got your price and your quantity. They're affecting both of those things in an upward way right now, and it's really helping the business a lot.
I'm curious about this narrative, Brad, that even though they're still spending a lot on their new initiatives, including Reality Labs, which of course continues to lose money, that it matters less when they're bringing in that ad revenue. Is that a fair assessment?
Totally fair assessment. Yeah, it's kind of, if you're driving the top line growth, you're showing people fixed cost leverage on other aspects of the business. The way I say it is Mark's getting a lot of leash now from investors who are willing to underwrite those longer term projects. I would say I still don't think there's a ton of belief in what they're trying to build within the metaverse. But again, given the top line trends, given the earnings flow through that they're seeing right now, they've got some rope to work with.
When we think about the cost restructuring that a lot of companies had talked about and how that impacted marketing and advertising budgets, you've got a couple reports from this earnings season to look through to kind of see exactly where campaigns and spending are still moving forward. Is the worst of that cost restructuring that's impacted marketing budgets and advertising thus seen through some of the revenues from companies like Alphabet or Meta or even Microsoft, if you want to throw them in there to a certain extent?
Yeah,
sure. Is the worst of that behind us?
At least at this point, from what we can tell, and obviously we do our own research on this topic specifically, I think so. What we're hearing is that a lot of companies are still very, very uncertain around the future, and they're definitely struggling with we'll call it operating cost inflation, wage inflation. And so there's kind of two buckets we're hearing in terms of business priorities from a lot of the business agencies that we talk to, where we get a read into the ad channels. The one bucket is things that drive revenue today, right? That's direct response advertising in many cases. That is Google, that is Meta. And then there's all the other stuff that doesn't necessarily drive revenue either today or ever. And I would say in those cases, what we've heard is those areas continue to be soft, meaning businesses are still looking to cut their eliminate projects, pause, what have you. But people still, but on the other side, they are prioritizing advertising. And I think that's what we've seen show up clearly this earnings season.
Brad, at the same time, I was struck not just by Meta, but also by the likes of Alphabet, that even as things do seem to be looking up, the language and the tone, at least, is still very much focused on cost discipline, right? What do you think? Do you think that the cuts that we're seeing on the part of the companies are sort of done at this point? And what is that cost discipline going to look like for the next 6 months to 12 months?
Yeah, I think when you've come through the period we've just come through, right, the macro tumult over the last 12 to 18 months, I think management teams, and in this case for Alphabet and Meta, I think there's clear recognition that they have an expectation to deliver a tone of fiscal prudence, diligence, and efficiency on the cost side of the equation, right? It's not 3 or 4 years ago when you can just invest in endless science projects and the growth rates were high enough where nobody cared. People cared now. So I do think you're continuing to hear that narrative. I think in Meta's case, they've probably reached a point where they're more at kind of like a good new baseline for efficient run rate operations. I think Google, in some cases, I think they're, based on their commentary earlier this week, they keep talking about durably re-engineering their cost base. I do think there's probably a bit more ways to go in terms of trimming fixed costs there longer term.
Brad, they brought up Threads on the call, and of course that was within the question and answer period as well. So we got a little bit more color, but I wonder from your perspective, the type of timeline that you would like to see Meta platforms monetize Threads.
Yeah, I think, they have so many good other product cycle initiatives going on right now, certainly growing things like Reels. They're doing a lot of cool stuff in terms of business messaging. They're expanding the browser and things you can do there. Shopping ads are really effective. All of those things are incremental drivers for the business right now, today, driving material revenue growth, which has nothing to do with Threads. So my preference, honestly, would be to see them really look to enhance the Threads product and platform and grow the usership of that and see where we go before we think sort of about monetization. And frankly, I thought it was interesting last night, Mark alluded to the fact that it took very few engineers to build that. I think, honestly, this is one of these projects where they're going to be able to invest a bit into it, but nothing that's going to sort of break the bank. And they're probably going to be able to grow that platform over time. So I think we're still optimistic over the longer term that can turn into something material.
What does that look like? I think he floated, 1 billion users for Threads alone, I think. Is that realistic? What do you think the potential is?
Yeah, I mean, when you're starting off of a base of not quite 4 billion overall in the family of apps, no one else has a better distribution channel to cross-sell into a new platform.
Yeah,
so,
I will say, Brad, I don't know about you. I signed up for the thing like 99.999 billion other people did or whatever. I looked at it a couple times the first few days. I haven't really been looking at it after that, and that's been reflected in a drop in engagement. So I'm just wondering, how do they keep those people from just defaulting to Twitter, which is what I just went back to?
Yeah, look, it's going to be a steady shift over time. The product is clearly very, very underbaked. In some ways, candidly, I think they probably surprised themselves in terms of the initial adoption. And so maybe there's a little bit of product development hustle going on to catch up to that. But no, it'll just be a steady shift. I think for a lot of folks who are regular Twitter users, right? Twitter is the type of platform you wake up and it's the first thing you check when you get out of bed in the morning. That behavioral change will take time to come over, but obviously it starts with content and the content creators. And like I said, no one is better situated to distribute that to their huge base of users and bring those content creators and bring that content over to Threads over time. No reason to think that user behavior can't sort of steadily evolve like that.
And just further along the line of that user behavior, what type of shift do you need to see for Threads to be successful in terms of the number of kind of idols and passive users that are on there? Like Julie, like myself too. I signed up and I put a placeholder thread up there just to say, hey, I'm still trying to figure this thing out. Just give me a little bit while I get my bearings. And I haven't posted anything since. So there are a lot of people that are perhaps just Thread lurkers or Thread passives or idols that they've got to be able to get into that content generation side, which is a very small percentage and base of that millions, tens of millions, 100 million users that they have on there signed up right now, at least.
Yeah. I think there's a critical difference here between how we kind of traditionally think of Twitter. Twitter is obviously, it's a forum, it's a town hall, and all of that. But I think the important part is that Twitter, because of the data and kind of the understanding that Twitter has of its users, which is not that much, honestly. In many cases, there's a lot of anonymous Twitter users. Twitter wasn't very good at targeting and understanding the intent of the users on a commercial basis, right? Meta has all of that. They know a ton about people because of Facebook. They know a ton about people because of Instagram. And oh, by the way, we're now all spending even more time on Instagram because of Reels, right? So Meta can take all of that intelligence and knowledge of what they know about us, and as they see our activity evolve into threads, they're going to have a tremendously better ability to target people for value and commercial intent on threads over time.
All right, I'll threads this interview later. Thread doesn't work as a verb yet. Brad Erickson, RBC Capital Markets Internet Equity Analyst. Good to talk to you. Thank you.
You too. Thanks, guys.